Yeah, hi everybody. Thanks for joining. This is the second session where we're going to see the important terminology used in accounts. So I just want to know if you're able to hear me. I think I need to put it, yeah. Are you able to hear me now? Yeah, Hyder Ali, can you hear me now? Am I audible now? Yeah, now can you hear me? Type yes. Okay. Rehan, Rehan, who's this? Can you type your name? Who's this? It's a new joinee, is it? Okay, great. We just wait. I'm just holding on for another member to join us. So as soon as the other person joins, we will start. Hello? Ah, did you join? With what name? I should be able to see you on the chat. I can't see you there. Okay, that's not visible. Did you join in YouTube Live? The link which I gave you? It's not showing up here. Okay, okay, fine. If that's the case, I'll start then without any delay. Okay, yeah. So that's fine, guys. Thank you for joining us again. So we're going for the second session. I'll quickly do a recap of what we learned last class, so in that way everybody can get their memories afresh. So basically, yeah. So here, first of all, we are looking at the uh, basic accounting terminology which you must know in order to be able to work your sums, understand what is happening in accounts. Okay, so there's no point in just learning what to do and how to do. You also need to understand why, what is the logic behind everything. Okay, so as in the previous session, we had discussed that a capital is an amount which the owner puts in his business. So the concepts which you have to really focus on is the amount invested in his business, not in other businesses. If it is other businesses, then it is called investment. It's not a capital. So it has so the owner has to put in his own or her own business. So that's capital. And when the uh, owner removes money from the company for personal use, that is called drawings. Okay. Now next we have income. Income is when the company sells any products or services and gets money. That's called income. And when the company pays towards various expenses to run the business, that is called uh, buys products or services for services. It's called expenses. Now, and then sundry debtors are customers who buy on credit from you. They say, I'll pay you later. So they fall under sundry debtors category. And then the opposite of that, when you buy on credit from others, they fall under sundry creditors. Now, if any value of any of the product, it could be tangible or intangible. If the value increases, it's called appreciation. Okay, the opposite of which is depreciation. I'm not taking too much time here because we've already discussed this. All right. So assets are the money which you owe. You own it. It should be your own. Okay. And maybe some things you have ready in cash or in liquid form. Some which is not in liquid form. All those fall under assets. Okay. The opposite of that is liability. So I generally use the term you are entitled to receive. आपके पास ये हक होता है, आप कोई चीज पैसा आपको मिले, एक हक मिलता है. सो दैट इज एसेट. जबकि लायबिलिटी जो है आपकी जिम्मेदारी है पे करने की. यू हैव द ऑब्लिगेशन और इट्स योर ड्यूटी, इट्स अ लीगल ऑब्लिगेशन फॉर यू टू पे बैक द money for either you might have bought some goods or services or taken loans, whatever the case may be. So that is a liability. Now today's topics. Okay, now in liabilities there's something called outstanding expenses. It's a very important term when it comes to your examination. Generally I have found students making a mistake in understanding this. Okay, so imagine that he is the boss here and these are his employees. Okay, so the boss is liable to pay salary to his or her employees. Now, at the end of the month, there will be generally in companies either the first or fifth or within 10th, the company has to pay the employees the salary. But for some reason, the company is, did not get funds or the money is running in bit of a loss. The company, for some reason, could not pay. So if the due date has passed, that means, for example, let's take 10th as the due date for paying the salary. Now today is 15th, so then it becomes an outstanding expense. It is already an expense. Expense means you have to pay, but expense in expense, generally what happens is you would have paid it. Okay, that's why if you see in your textbooks, when we get to your sums and other things, I will show you this difference. But as of now, just try and understand. It will say rent paid, interest paid. The word paid will be there. Or even if the word paid is not there, we have to consider that the payment has been done. So only in the circumstances, only in the instances where the word outstanding comes, that's when you should understand that it is an expense. Just a minute. हेलो. हाँ. जोर से आ रही है. स्लो आ रही है. अच्छा. ओके. ठीक है. ठीक है. I'll try. Okay. If you have any audio issues or anything, please raise that issue in the chat so that I'll be able to rectify then and there itself. Okay. So otherwise, I would not be able to. So otherwise, I'll not be able to know it. So, right. Let me see if I can fix this problem. Can you hear me now? Is the voice audible? Type yes if it is the case, or no if you are not able to hear me. Please be quick. Hello? Can you hear me? Okay, is it loud enough? Haider Ali, can you say it's loud enough? Can you type it's loud enough? Okay, fair enough. So I'll move on. Okay, so thanks for bringing my attention towards that. I was not aware of it. So, okay. Now, now I was talking about outstanding expenses. All right. So now outstanding expenses are those expenses which have not yet been paid. That's why I've used this image here. Not paid. Okay. It is an expense. It's not paid. Uh, Guys, remember one thing. A picture is worth thousand words. Some of you might have heard this proverb. A picture is worth thousand words. That's why generally in my presentations, in my classes, I normally prefer using a lot of images and visuals. The reason I'll tell you why. Okay, Allah has made given us different types of memories. One is called auditory memory, which is the memory which we get through the ears. Okay, the other one is visual memory or visual learning. So we can be either a visual learner, we can be an auditory learner, or we can be a kinesthetic learner. So kinesthetic is while we learn by doing things, and visual learners are those who learn by seeing. For them, diagrams, images, pictures, that really appeal them. They can learn from that. There are some of us who primarily learn through listening to lectures, listening to audios, listening to other people saying, and there are some people who will learn when they do something physically. We all have these capabilities, but the higher degree, okay, get inclined towards being more visual learner, or more auditory learner, or more kinesthetic learner. So when we have a visual appeal in our content, so that will make the content easy to understand, appealing, and it will help you remember the stuff. The purpose telling you at this stage is because please don't take these images very lightly. There has been a lot of thought that has gone behind picking and choosing these pics for you, these images for you, because the images are talking volumes. Rather than me explaining for 30 minutes, a picture can do that trick within 30 seconds to a minute, and you can remember it for much longer time. So, and another reason is also that God's given us left brain and right brain. The left brain is determines letters, words, logic. It stores that, and the right side of the brain is spatial awareness, color, imagination. So images play a role there. So we'll be using both sides of our brain. That's when we will be using our brain in an optimum way. So for that reason, don't take these images lightly. If you look into the image even later on, once this session is also over, when you watch this thing presentation again, pause it, give it a thought, because give your mind exercise to remember things. Okay, like your physical body needs exercise, your mind also needs exercise, and the exercise which you can give to your mind is inquiry, to ask questions. So when you ask questions, your mind is forced to think, and when the mind is forced to think, the mind discovers, explores. That's why when we go to a new place, we go and see, oh, how this building is constructed, oh, where's the dam, oh, how they built the dam, how could they have done this. So at that time we are learning actually, and in a fun way we are learning. So we should bring that same habit into our education. Let's move on. So, outstanding payment is basically expense which has not yet been paid, which is which has passed its due date. Like in case you have a electricity bill, you generally get 14th of every month. Normally, you get on the second, third, fourth. You get the bill, and you have 10 days to pay. That's the due date. So if it goes past that, then it becomes outstanding bill. That means you have to pay it urgently. Okay. The opposite of that is accrued expense. Okay. Just a second. Let me minimize this. Okay. Yeah. The opposite of that is accrued expenses. Accrued expenses are money which you are entitled to, which you are supposed to receive, but it is long due. It is also, instead of past due, we can say past due date, we can say it's long due. The better connotation for this can be long due. Like for example, you are owner of a property, and you're supposed to get rent, and for some reason your tenant has not paid you last month's uh, rent. Now he's not paid for April, May, and now it's June. So its money is getting accrued. That's why I've used this image where money is growing. That means your receivables is increasing. All right. So that's accrued uh, income. Accrued uh, income is actually an current asset. Okay. let's go into looking at what are fixed assets. Okay, fixed assets. The important concept which you need to understand is that the money is there, but you cannot use it immediately. It cannot be converted into cash instantly. That's why it's called illiquid. It's not in liquid. It's not liquid form. That's the reason you divide assets into fixed assets and current assets. I don't know if any lecturer or if anybody has ever told you this. That is what fixed asset is. Fixed asset is, it is actually your money, but your money which you cannot use it now. It's not in cash form. It's not in cash, or it's not bills receivable. It's not credit card bill which is due, or it's not a check in your hand or demand draft. So all those things you can go to the bank and instantly you can convert that into cash. So that's why these things are called fixed assets. That's why the word fixed is used. Seen a message here. Okay, reconnection. So let me just take a. Did you Okay, did you miss out on anything? Because I just got a message saying that OBS was disconnected and it is connected back successfully. Did Were you able to miss? Did you miss out something? Do I have to repeat something, or shall I move on? Type in the chat window and let me know. Are you guys able to hear me? Okay. So I asked you a question. Can you be a little more expressive? Did you miss out on anything, or you heard me? Okay. Okay, great, great. Thank you. Right. So, right, let's move on then. Okay. So that's fixed asset. So fixed asset basically is your money or the company's money which is cannot be used immediately. It's not in cash form. Okay? It is in fixed uh, it's attached to something. Your money is there, but not in cash, but in kind. Like, for example, you may say, okay, fine, it's my car, I can sell and I can get the money. But as you can see, it's an expensive car. The car might cost you 50 lakh rupees, but you may not get a buyer who's really willing to pay that amount. So, will you be would you want to lose about 5, 10 lakhs, 20 lakhs just to get that money? Maybe not. Maybe if you're so desperate, maybe you may sell. Okay, but that's not why you have assets for. Assets are actually the backbone of a company. So nobody wants to sell their assets just like that for whatever throwaway price. So that's why it's called fixed assets. Okay, let's move on. Now let's see what are uh, current assets. Current assets are cash or cash like assets. That means they are liquid. You can sell them off quickly and realize money. As you can see, I've used the image short term loan. Okay, so it could be a short term loan that you might have given to somebody, like in to your family or your friends or to other businesses. You may have given 7 day loan, or maybe a month's loan or something, or 3 months loan. Or sometimes there are corporate bonds. There are various other investments, short term investments, like there is um, NSS, national savings scheme. Short term, I'm not talking about the long term, short term, where if you pay within 30 days, within 60 days, within 90 days, you can get your money back. So these are all cash or cash like assets. And as you can see, uh, he's got cash. Here he's got some form of thing, bills receivable, okay, or cash at bank. I've just used an image where the lady is paying into the bank. So I've tried to be as close as possible to the reality. And here, uh, this is sundry debtors to the to the credit customers you have given. This lady is giving it to her customer. So any credit sales which you have done, that you can call up and ask for your money. So all these things you can realize money in a very short period of time, maybe 3 months or 6 months, within 3 or 6 months. Sometimes it can be much shorter than that. And these are goods which you have in stock. So those goods also you can sell within 3 months, 6 months you can sell. So these are current assets. So these are fixed assets where it's your money, but it will take much longer time for you to realize the money. Whereas current assets, it takes much shorter time for you to get money in cash form. Okay. So now let's move on. These are long-term liabilities. As you can see, I've used the term long-term liabilities. So maybe you have taken any loan you would have taken uh, by keeping something as collateral. Collateral means like a bank will not give you money just like that. Like for example, you say I want 20 lakhs or 50 lakhs or I want crore, 1 crore rupees. So bank would not give. Bank will say, okay, attach your property, attach your land, attach something which is much more valuable than the loan. Generally, banks will give 70 to 80% of the market value. If your property is worth 1 crore, the bank will give you loan worth up to 70 lakhs or 80 lakhs, because there will be recovery expenses and other things. Or maybe you may not have paid the interest, installments, you may not have paid the interest. So all those things will accrue. So that's why bank wants to be very safe, and bank will give you loan only up to 70 to 80%. So that is construction loan. Generally, this is 10 years plus. Now, I'm not sure you might have ever heard of this bull market and bear market. This is nothing but the share market. Okay, where companies they list their uh, companies are there. They list themselves on the stock market, national stock market, and Bombay stock market. There are various other stock markets. So you might have seen Nifty has gone down, Nifty has gone up, Sensex has gone up, Sensex has crashed. Sometimes in news you might have read this. But if you've not done not done that yet, I encourage you to do that. Okay, sometimes go on to NDTV and go and watch this, because in future, because you're in commerce field, it's a very interesting field, and it's very this knowledge which you need to acquire. Okay, so that also is a long term uh, liability. Okay, now capital is the money which the owner is putting into the business. Okay, it's also a long term liability. Now debentures are like shares. The difference is, in shares what happens is, uh, like for example, you pay 1 lakh rupees to Geo, Mukesh Ambani's company. The Geo will say, okay, here, take these papers. You are half a percent share of this market. So there'll be a market share for that share. There'll be a share price. Okay. So it starts from 10 rupees, but depending on the market value, it can be in thousands also. It can be in hundreds. So they say that you are a part of the company as many number of shares you own. Okay, but in debentures that doesn't happen. Here also you're giving money to the company to run the business. In this case also you're giving money, but this is more of a loan. Here you don't become the owner of the company. Here you get a fixed interest rate per annum. So that is debentures. That's the difference between shares and debentures. Obviously, in second year, you will have a chapter on share market. Okay, so it is very useful for you. And then, as you can see, I've chosen the long-term loans. So the idea behind this is repayment period should be more than 10 years. That is the idea. That the it is you have to pay it in a very long term. It could be 10 years or 10 year more than 10 years. Okay. So that is long term liabilities. And now I've not dealt into short term liabilities, medium term liabilities because uh, in for your purpose it's not needed. So that's why I've skipped that part. Okay. Now let's look at short term liabilities. Short term liabilities are repayment period between 1 to 3 years. What are those? It could be creditors. These are very short term. Okay, like salaries, every month you have to pay. Utility bills and taxes you have to pay every month. Working capital also you keep requiring. So you for which you may take short term loans, loans which may last for 3 months, 6 months, okay, or 1 year, up to 3 years. That's short term loans. And sundry creditors. Sundry creditors is from whom you bought goods on credit. Uh, is it clear? Great. So, is it clear? So, this brings us to the end of the slide. It brings to the end of this session. So, next time onwards, I'll just show you the important things which I had listed, and I can just relate to that. We discussed sundry debtors, sundry creditors. We saw capital drawings. Okay. I'll come to gross profit and net profit when we are doing profit and loss account. Gross loss, net loss, sales, purchases when we do that. Appreciation, depreciation, I did. Sales and purchases we did. Sales is nothing but income and purchases is nothing but expense. Okay. Appreciation, depreciation we did. We did current assets, fixed assets. We did current liabilities, long-term liabilities. We did assets, liabilities, direct income, indirect income, direct expense, indirect expense. I'll explain it when we come to P&L account at that time. I also touched upon accrued income, outstanding expenses, opening stock and closing stock also. These are the terms I've deliberately kept it for a later session. So as of now, you have all the important concepts which you would require in this year. In this year's accountancy, whatever concepts you frequently will come across, it is one of these things. Okay, so that's the reason I thought it is very good for you to first understand that deeply, so that anytime, uh, see, basically accounts is nothing but uh, when you get a transaction, you need to classify it. Okay, first identify it and then classify it. I'll give you an example. uh, Rahul invested 10,000 rupees in business. So first you need to identify what are the accounts here. The accounts over here is Rahul's capital account and 10,000 rupees cash. So these are the first step you do. That is, you identify the accounts. Then you classify them. Then you say, okay, capital account, what type of thing is it? Among the three, which is real account, nominal account, and personal account, which one it is? Which type of account it is? So, capital account is a personal account. Okay. Then you classify what is cash account. Cash account, we can touch it. So, it is real account. Now you have classified it. Now, after that, after classification, now you need to apply the rule. In personal rule, debit the receiver, credit the giver. Here, Rahul is giving the money, so we have to credit him. And real account, it's a debit what comes in, credit what goes out. Here, real cash is real. Cash is coming into the company, so we have to debit it. So that's what it is. I'll go through this. Don't worry. I'm just not gonna speak like this. We're gonna do it practically, and also give you assignments to for you to do it, so that later on at a later point of time I can check and I can get back to you what you've done it right, and if you've done any mistakes I can tell you how to rectify them. So just for you, for an idea, how what accounts is. The accounts is basically identifying, classifying, applying the rules, and recording it in the appropriate place. Whether we have to debit it, credit it, whether it is an asset, whether it is a liability, whether it is an income, whether it is an expense, whether it is a direct income, whether it is indirect income, all these things we have to identify and classify. Okay, for that, this theory was very, very crucial, very, very important. As of now, we've come to the end of the session. I would like to entertain your questions if you have. Feel free to ask. You can type your questions and then I'll try to answer it for you now. If you don't have any questions, you can type no questions, so then we can end this session. Okay. All right. So I think I have lost you guys. It is showing unable to connect the chat. So I would not know. I assume that you've got it. If there's anything later on, you can put it on the WhatsApp, and I can include that in our next session. Okay. Thanks for joining. Have a great uh, time. Till next time, you will be intimated when is the next online class. Bye for now. Thanks for joining.